Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Wednesday, about a session and a half left until Christmas. So all day long on TV, you'll probably hear about the Santa Claus rally. Is Santa Claus coming? Well, I think in Monday's morning call we said if Santa's coming, it probably should start then. I think he's already pretty much traveled and sprinkled his little presents as far as this rally is taking place in the past 3 days where, at this particular point, if you're getting long for Santa, you better be a bit more careful. So before I get into that, overseas, I like to talk about what's going on over there. In Asia, it's been pretty quiet. You don't hear about the craziness in China. It's pretty much stabilized somewhat. You look at the chart of the FXI. When it's off lows, not making new lows, people don't really care about it. Take a look quick. Take a pretty quick look here. Like you're just talking about, what could happen here into the beginning of next year. It does look as if this descending trend line here in China might wind up resolving to the upside. So if the FXI can get above this, just say 37-ish spot, perhaps there's some room here. Again, technically, it's pretty broken considering it's below all the moving averages. But just looking at where we stand, I remember starting last year, I said if we can get above this spot, we could see a really nice run in China. And I wasn't expecting that, but you don't need to know what to expect if all you know is what potentially could happen. So here, a bit of a descending channel. So maybe there's a move back towards 39 to start the year, as some people might think if they want to get some China exposure, new flows come in to start the year, and then you get your move to 39. As far as Europe is broadly higher today. It really hasn't rallied much. The dollar has weakened, so the HEDJ, if you've been trying to be long Europe for a bounce, you haven't been doing so well. It's actually right back down to the lows here. So the currency was working actually against you. You'll see maybe you get a little bit of a bounce today, but ultimately below every moving average, pretty broken. If you look at the EWG, maybe without the currency, doing a little bit better, but still nothing special. For this amount of time, this Europe has been in this downtrend, and we'll see if this changes into the new year. But as of right now, perhaps there's room to get up towards this spot, which is around 27. So from here, I guess that's not really saying much. But a trade's a trade, and when you're here and you're not at the beach and taking advantage of vacation time, you got to figure out how you could make some money. And today the futures are up again, up about 9 to 10 handles depending where it is right now. And if you watch my morning call on Monday, this is what we went over. We talked about the potential floor here. The potential floor cutting across and going sideways. And I said if we're going to get a Santa Claus rally, we're going to have to hold this 1993 to 2005 area, and that's what held. So this was Monday, this was yesterday, and now we're pretty much opening up into an area that could pose as pretty big resistance. So this 2053 to 2061, to me, if the sellers want to remain in control, they come out and probably sell into this little zone, and that would keep this little trend of lower highs. So we pretty much figured we can get some type of bounce for the seasonality. If again this is just a bounce for Christmas dressings, this would probably be a spot to be selling versus buying, and we're pretty much opening up somewhat into there. So if you take a quick look at the spiders, which a lot of us trade, you'll see that there is a heck of a lot of noise coming into these moving averages. So with that being said, you draw this little line here, and there's this zone from about I would say 204.80 into about 206.40. So into this area, I think some people are probably, if they're bearish, would say, okay, I'm going to be fading this. And if you played this for a gap fill, 3-4 day move-ish, this would be your spot to say, okay, this was the easier part of the move. Now to get through this, it's going to take some volume and some a better environment, not just a seasonality Santa Claus bounce. So I would be looking to perhaps trim into that. As far as other sectors, there's nothing really standing out. Tech is acting a little bit better, which it's been all year. I will say the Russell has been a big laggard, and I've looked at some historical data, and I don't know why, but the abbreviated day on Thursday tends to be a better day for the Russell. So I don't know. We'll see what happens today. If it doesn't do much, maybe you go long for Thursday and you get a trade back up to this 115 area. This every time the market rallies back up, this makes a lower high, and it's just been a whole lot of nothing. It's still below every moving average, but maybe there's a trade there, and again, that's what you're looking for, in this area. Same way, a lot of guys were poo-pooing the fact that commodities bounced yesterday because they've been broken all year, but yeah, they have been broken all year, but if you caught a trade yesterday looking at the relative strength in oil in the morning, you made some money from yesterday into today. I know I've been long the XLE for 2 days. It's been a broken stock in a bad downtrend, but you know what? A trade's a trade. You look here at the XLE, and obviously below every moving average, broken, but again, you can get some kind of oversold moves, and this doesn't look like much, but it was up 50 cents yesterday, up 70 cents today. That's some money there. So there is a gap to be filled up to 60.38, which I think it's going to do this morning. And then remember, this is where it broke down from. So I would think if it wants to continue up into some resistance, it does have some room back towards 62. And if you look at the OAHs, that even outperformed yesterday. But again, a day is a day, and who knows how much further it can go. But if you're in this, let's try and see if it could get back to, let's see, the moving averages, which, let's just do it like this, which come a little bit closer to this 27. Okay, and if you look, this is where it broke down from. So here's your overthrow move back. So again, Doji cleared this high. Some guys went long. You have some room into here. That could have been your tactical trade if you're tactical like we try to be. And then I guess if it really wants to go a little bit more into the, for just say a January effect type trade, there's still even a little bit more room higher. So this, again, I talk about an easy move or an oversold bounce move, and then something that could be a little bit more, but you need a little bit more traction for that. Anyone trying to play the high beta names yesterday probably were a little frustrated because that's not where the action has been in the last 2 days. I don't know if they come for those into the end of the year because they want to be marked up so people look like they had a better year, but they haven't done that yet. I'm not saying they won't, but yeah, that can happen. Or another thing could happen is come the new year, people don't want to sell their winners for taxes. They can be sold quick. So you got to be a little careful trying to stick with just what's gone on all year because the year's almost over and people are trying to, think about what to do next. Going through quickly, Amazon, is getting tight here. It's been in a great trend all year. If you look, this is actually, obviously above all the moving averages and very strong. It got very, it's getting very tight here. I would say if you are long Amazon hoping it gets marked up, it should not break this spot. So I would say, like in my note I write, if you're in Amazon, be in Amazon long verse 659, and I guess if it wants to get going, it's going to have to clear this spot here, and then you have the old highs. I don't know if it's going to need new money for a new year, et cetera, or maybe next week after Christmas and the bounce back in the weaker names, maybe they come to mark these up. But here's your 3-day inside range. Google acted a tiny bit better than Amazon yesterday. Again, above all the moving averages, much stronger than everything else out there. But question is, can you get some follow through for the end of the year here? So this could be very similar. Trade versus this, and if it wants to get marked up, you do have some room back up to the 780-ish. So it's just a matter of whether you could sit in it versus that or not. So I would say try not to buy strength, but trade versus an area and then see if it works out, because buying high and selling higher has not been a great strategy for 2015. Let's hope that changes next year, or even shorting lower and covering lower because of the way the range has been for the majority of the year. So we'll see what happens there. I will say that Netflix has been weak, out of play, drifting lower. Maybe it wakes up, maybe it doesn't. At this point, again, this has been a great stock until this little outside day right here, which is when the trend kind of changed and it said, uh-oh, and this is when it broke the 8 and 21 day. But all in all, it did come in and hold the 50-day, so pretty symmetrical there, looking at it on the long term. And then if you look closer to see, execution-wise, it did just hold the 50-day, and I guess, for for a trade, like maybe it could be long verse this spot, and maybe there's a trade back up to this 120 for options. But I'd be careful. But best in breed on a pullback. Question is, has it changed? And we're not so sure yet. Apple has been just a weak stock, and maybe it tries to push back towards 109. I don't know. It's been downgraded almost every other day. The time to have been short this name, or sell it was when this trend broke here, when I was on my back. I called the trade office. Thank goodness for stops. I think I got out of it right around here. Looked as if this day right there, remember that jobs report day, was going to get it back in the game to clear this resistance. Well, it failed. That was my out. And then, thank goodness, you look what's happened since. And at this point, I don't know. I think it's a reach, but it came in pretty fast. And maybe, looking for a trade, because that's what we do as traders. Perhaps they want to, bounce it back towards this 109.60 or 110. For that to happen, it's got to get above this 2-day range and stay above it to see that. And then if it, really wants to rally, which I don't know what would be, what's it called, the catalyst now, but here's your 112. So above this, and maybe there's a little tactical cash flow trade to there. As far as a name that has been working and I think has a great technical setup, which hopefully it's not a fake out, is this BABA. BABA, you could almost say you have a cup and handle type pattern here, where here's your big cup, okay, and then here is your sideways handle, and it looks like it's trying to break above this 85-ish. So I would say if this can get above 85.50 and stay above it, first move, could be to 88, okay, where it broke down from. That would be nice, okay, and then even a little bit higher. And if you do a measured move of what this should be, this was as low as what? I'm a little blind. So 56 to about 85. So just say 55 to 85, 30 points. 30 points gets you a measured move. If BABA wants to be a name to go to this year moving up, that takes you back towards 100, almost where it broke down from. And I think the sentiment around BABA is getting a little bit better. So if you look at this like that, this could be a decent trade. Actually, take a snapshot of that little cup and handle, or you can even say this is a little bit of an inverse head and shoulders pattern, like the left shoulder, the head, the right shoulder above this. You could see that. That's why in Redler All Access, I think on Monday, I put on the 85 January calls. It's on my disclosures, and we got a great print. And I also own it long. I wasn't sure if there'd be a trade through this 85, but so far we'll see. But anyway, it looks better. Let's hope that it's not like 2015 earlier when something looks good, you have to sell it versus add to it, because adding to something that's already been sort of working did not work that often. So anyway, this is looking pretty decent. As far as social media, you got Facebook. Still, best in breed, a little noisy lately. Not sure what's next here, but all in all, if you look at what has happened, nice consolidation above the prior high, has a bit of a consolidation here. Looks like there's room back towards this 107-ish or 108. I don't know if it's going to make new highs and get above this before year end. It might need new money. It might need another earnings report. I don't know, but again, better technically than most things out there. So let's see if it could get back up to perhaps this spot, at some point, maybe before Christmas or into New Year's. We shall see. Maybe be long verse 103.50 for a move up to there. LinkedIn has been drifting away. And I guess if you got out when it broke this spot here, maybe there's something to look at. If this happens to break through this to the upside, I don't think it's worth a lot of attention. But if this were to get above this 229, I'll make it a little closer up so you can see it. Perhaps there's a trade for a few points into the resistance area. Again, decent numbers. I think some analysts are talking good things for this next year. So if that's the case, it's got to break this descending channel to the upside. So for that to happen, it's got to get above this 229.5 to see a little bit more. Twitter's been a piece of what. A little bounce yesterday. Just look at the downtrend it's been in. If you get out of things when they break the 200-day, you've been out of this thing and maybe traded it here and there. I haven't really been doing anything in this ever since I got my clock cleaned on this fake out here when it looked like it was going to break out above this and failed, and I haven't really, now still looks horrendous. But maybe there's a small January effect type trade there into next year. has some room to 23, but doesn't look like anything worth writing home about. I think a lot of money was made in some of the copper names, which I don't know too well. Some guys were talking about Alcoa. If you want to look at, a laggard trade from this year that's got absolutely crushed from this spot. Looks as if, it did break out above a small level yesterday. So maybe, it continues. You see a move back to 10 and change. Some people were looking for that in FCX, but hasn't seen an up day in so long. Yesterday, I think, was the first up day. This goes to show you also how when trends change. If you would have got out of FCX when it broke the 200-day, you would have been out of this thing at 35. It's now 5. So again, lots of rules here, lots of things to learn from 2015 about moving averages. Below the 8 and 21-day, it's not a swing trade. Below the 200-day, it stays below it for a week. You get out of Dodge, and it hasn't been above since. And now, can it see a lift into the into the new year? I don't know. I guess if it were to break this, maybe you could see a move to 7 and change. I shouldn't even be putting this on the morning call, but maybe these exhausted copper, commodity names get something, and that's what some guys are looking for. As far as other metals, the GLDs did have a decent 3-day move, but it doesn't seem as if it wanted to go with the other commodities yesterday. I guess this probably needs to hold this 102-ish area to keep some kind of attention there, and then this would be resistance if it's going to continue up to give you a bounce back type trade. So just make sure that 3-day bounces have been better to sell than buy for about 2-3 years now, or 2 years maybe. But anyway, holding 102 maybe gets you another trade a little bit higher. The banks have not been doing anything special, and again, if you go with my day count, day 1, Monday, you dip your toe in. Day 2, on the stretch and the confirmation of day 1, you add, and day 3 you sell or you trim. You don't typically buy day 3 for a day 4. The probability then goes down. So again, with the SPX opening up near 2050-ish, probably not the time to be in the spiders. Maybe some other stocks, individual names work, but probably a time to sell your spiders if you were trying to catch that move from 200 back to 205, and then if you're going to look to be short, from 205 to 206.40 is that zone that, if you're looking to be short, maybe test that. But again, they push envelopes both ways, so, you're not going to be perfect. So either do a level versus a level, or, give it some space and don't start too early doing that, because you might have to get squeezed out before, you're right at some particular point. So today is Wednesday, another day before. It's a full trading day before tomorrow, which is abbreviated. We've had a 3-day move. Some laggards are stealing the spotlight. The high beta names are a little quiet. I don't know if they get marked up or not into the end of the year because they've been the strong ones. And you also don't know if the tax selling comes in after the new year. Same way you have a January effect on the beam down names, that tax selling stops and they lift. Some of the leaders, either new money come to those leaders, or people start selling them because they couldn't sell them into New Year. So a lot of different dynamics happen, in the last week and a half of the year into the first week or so of January. So, let the market show you which divergences or which way it's going to go, and continue to take the high probability trades, and don't focus on the ones when you're trying to be the last one standing, because usually those are the ones that get their legs swept. And that's a wrap. I will be here today for the recap. Follow me on the virtual trade floor. I'm putting together my 2016 thesis. We're doing a lot of work. We're going to have some good names to go over with you, in the coming year. And that is that. See you later. Have a good one.